Mike, a lot of market ale around the world is being blamed on China. Do you think this is justified?
Well, China is clearly the epicentre of a lot of market angst. What is happening in China, what will in China is important. It has to be. I mean, China is the world's second largest economy. It's simplistic just to point at China and say, well, you know, it'd be great if it weren't for China. You know, I think it's very convenient for all sorts of politicians to say, you know, we're doing a great job, but those pesky Chinese, you know, what can I say? A lot of it comes to cheap money, and you know, if we're talking about an investment bubble, overcapacity, misinvestment, malinvestment, my goodness, you know, I mean, China has got that in spades, isn't it? That has to be unwound, and that's not going to be a painless process. It doesn't help as well, I mean, and Christine Lagarde referred to this at Davos, the PBOC has a communication problem. Wow, I mean, talk about understatement. I mean, I did compare a little while ago the PBOC's website to a 12-year-old science project, which I suspect is uncharitable to 12-year-olds, but it is absolutely dreadful, and it's not the sort of way that you know, a large central bank should be talking. So there are a lot of self-inflicted wounds, but you know, the problems that China is grappling with are deep, they're structural. They won't, even in an optimal environment with fantastic policy communication, etc., it's going to be a bumpy old ride.
So what's the end game with China?
Big deval. When I was the pariah at this conference 14, 15 months ago, I mean, my suggestion was we need to see something like a 25% devaluation of the Chinese currency, and we've seen, what, 5%, 6% thus far. So there's a lot more of that to come, I think. One thing which would actually, to some extent, alleviate the problem, make it less acute, would be if China were to basically bin its 6.5% growth target, because that would make the adjustment a lot more gradual and a lot less painful for everyone else. Because as we say, if China were to deval 25% tomorrow, the rest of the world would certainly know about it. But you know, in the meantime, that uncertainty just makes it very difficult for risk assets to come back, because you know, the emperor now has no clothes. We now can't convince ourselves that, you know, China is going to make this, you know, relatively painless transition, and it's not going to affect everybody. We know it's going to affect everybody, and maybe not in a good way.